Welcome to the Real Estate Entrepreneurs Podcast.
Welcome to the Real Estate Entrepreneurs Podcast. Today we have Mr. Michael Udiale. I don't know if I said it right or wrong, Michael, but my
That's
apologies.
okay.
I should have asked you that before the podcast, so I could get it right. But it is what it is, man. Here we are. We were actually chatting before the podcast started about me personally moving down to Venezuela, which by the time you hear this podcast, I now live here full time with my wife and kids. And Michael is from Nigeria, so he was telling me how much he's seen other people go back to other countries that where they have roots and things of that nature for multiple purposes. But we were also talking about people from the U.S., Americans that are actually moving abroad for basically cost of living and maybe better quality of life. Okay. So anyhow, Michael, thank you so much for being here today, brother. Welcome to
My
the
pleasure.
podcast. Tell me a little bit about yourself, man. You're from Nigeria, right? So tell me about your upbringings in Nigeria.
Thank you, Ricardo. It's my pleasure to be here this day, whoever is listening, wherever they are listening from. Yes, I grew up in Nigeria originally, and my parents, my dad especially, was an entrepreneur. He was one of those serial entrepreneurs who did a lot of things. He was a first among his peers in many of the things that he did. I think I was blessed to have a situation where he kind of plugged us into helping to do different things in all of his businesses very early in life, as early as when we're just coming out of elementary school, even getting into high school. So that entrepreneurial spirit has always been in me. It's just something that naturally flowed out of me by reason of my upbringing. My wife also had that same spirit. My dad had quite a lot of premium for education, so going to school and getting all of the best grades was non-negotiable. That all led me to becoming a chartered accountant, and then when I relocated to the United States some 28 years ago, I continued in that same field. Again, the entrepreneurial spirit. I worked for 10 years in corporate America, rose to very, very high levels of the C-suite, and I felt it was time to get out and go do my own thing. And that's how our Smith CPA as a tax advisory practice started some 18 years ago. It's been a long roller coaster. It's been fun. I have enjoyed every minute of it. I still enjoy it. And along the way, I began to do all kinds of other businesses also here in the United States. Real estate is there. Investing in some technological apps, it's also there. And I will be talking of one of those kind of apps before I end this podcast, because it's for real estate professionals to be able to track an area of their businesses that the Internal Revenue Service does a lot of auditing on. Okay. So I am fond. We have an app which is being used for telehealth in Africa. So there's just a whole lot of things I not dabble into, but I get myself really rooted in things that helps to make businesses better.
I love it. So you are. Let's talk about the app, because we can talk about real estate later. Okay. I'm excited because you're right. I mean, if you found a challenge, right, which is the IRS is auditing real estate investors because of this particular section,
Yep.
you came up with an idea, maybe, or maybe somebody else, I don't know who, but
I did.
you came up with the idea. And you said, you know what, why don't we solve this challenge to prevent it? I'm going to assume, okay, is to prevent real estate investors from being audited because they're making mistakes on their returns.
Correct. So
Tell
let's
me
talk
about
about
it.
it. Yeah. So again,
What's the app called? Number one, what is it called?
the app is called Track Next. T as in Tom, R as in Rainbow, A as in Apple, C as in Charlie, N as in Nancy, E as in Edward, S as in Sam, T as in Tom. Okay.
Track Net. Okay, I'm gonna find it right now.
No, don't find it right now because I'm getting them to finish up some
Oh,
tweaks.
so
Yeah.
you're still working on it? Okay, perfect.
But by the time your podcast will be on air, it would have been fully live. Okay.
I love it. Make sure you send me an email and let me know, Ricardo. You need to go download it.
I definitely would do that. So now, for those of the listeners who may be really real estate professionals, you may understand that if you qualify as a real estate professional for tax purposes, there are significant tax benefits that you get. Some of those significant tax benefits is that one, when you do cost segregation on your portfolio of real estate, you get big depreciation amounts. And for you to be able to use those depreciation amounts and use that as active losses, you got to be called a real estate professional. Now, the IRS rules are strict. Section 469 talks about what it takes for you to be treated as a real estate professional. Unfortunately, both many real estate professionals and even tax advisors and even CPAs, many of them are not very sure of how to really implement qualifying to be called a real estate professional. It goes beyond, you got to put 750 hours. There's all what we talk about as to, okay, you have 750 hours, but are those hours really material activity hours that you are putting into your portfolio of real estate? So I started toying with this idea of this app since 2019 because I was in a tax conference and there was me and many other CPAs and everybody couldn't be sure of what exactly qualifies and what doesn't qualify as a material activity hour. So that was where I started developing the idea. I got two developers to work on the app for me, but what they came up with was not satisfactory. And I just pulled it all down. And then I got a high class developer who really took it to become what it is now. Now, I am super excited because between 2019 and today, we have now had additional things like AI. So with the tool, with this app, we have AI behind it that really helps and we make it very easy for the users of the app to be able to know whether or not the hours they are putting in is going to be a qualifying hour for material activity purpose or if it's not. Okay, so that's a big thing that we're doing on this app. And so that's why I said by the time this show will be live, it will be already on the Apple Store because it has already been approved, but we've just not released it. Now, the other thing is we don't want our app users to just be bumbling their way through putting time there. So depending on the level of subscription that you come into the app, you will get a live CPA support if you need it, okay? Because we want people to know that if they use this app and they follow our support and guidance, even if they do get audited, they can be sure that they qualify to be called real estate professionals and they get the tax benefits from being a real estate professional. So I'm excited as both a CPA and somebody who does real estate. It's the best of both worlds for me. And even for my fellow CPAs, for example, any of your clients who are using the app, they can invite you, their CPA, into the app. So the user of the app, for example, does not need to be printing out reports and sending to their CPAs. All they need to do is inside of the app, they just get to invite their CPA. The CPA can go in there and then begin to look at what their clients have put into the app to see whether or not they are doing the right thing. And at the end of the year, they can print the reports and keep for their work papers.
I love it. I have to introduce you to a couple of CPAs that I work with. Tony and JJ, they've been on my show before. They pretty much come to all my events. They sponsor, they talk about real estate and all of that. And I'm pretty sure there are synergies in between you guys there because they have their bulk of their business is real estate investors.
Absolutely. I am a firm collaborator with my fellow CPAs. I just feel as CPAs, many of the times, we all don't do sufficient enough collaboration. Okay. When I look at, say, dentists as an example, you will find that a lot of dentists, they collaborate among themselves. But CPAs don't seem to do a whole lot of collaboration. And I don't know why, because really for me, there's more than enough business to go around everybody. I mean, this country is suffering from not having sufficient enough CPAs to serve all of the entrepreneurs that are out there. So CPAs really need to learn to be doing more collaboration among ourselves.
100%, man. So tell me about what are some of the things that the app does?
Oh, okay. So some of the things the app does basically is help you track your time. Okay. It helps you track your time. It helps you know whether or not some of the hours that you are putting in are qualifying hours. You see, that's the big thing. The app will remind you when you are trending to not qualify. Because if, for example, you say you want to qualify to be a real estate professional, that ab initio means every year you put in no less than 750 hours into real estate activities. That's one. Secondly, the law says no less than 51% of your time has to be spent on real estate activities. So what that automatically means is that 750 hours cannot be less than 51% of your all of your business activity. But what really makes that whole real estate professional status be a clumsy thing is most people are not sure what really qualifies as a material activity and what doesn't qualify. Okay. So if, for example, you travel and you spend 5 hours from Atlanta to Tennessee, and you go look at a property, you end up not buying that property. Yes, you put 5 hours into that trip, but that is ending up not being a material activity time because you didn't buy that particular property. So that just becomes general investing time. So many people get shocked when at the end of the year, they come to you and they say, well, I spent about 1,000 hours on all of my real estate activities. I got 4 properties. Okay, that's great. You got 4 properties and you spent 1,000 hours on real estate. But if a good CPA begins to look through that 1,000 hours, you are going to find that a lot of those hours are what is just called general investors hours that doesn't qualify to be counted as material activity. Now, the real estate code, section 469, is a big part of the code. There are many things we do with the app. The app, for example, can allow you track your long-term rental properties. It allows you track your short-term rental properties, okay? Because the code and how you use the code for long-term rentals is very different from how you use it for short-term rentals. There are things like grouping elections. So my point is, one of the things as a professional, as CPA for 18 years, I have seen all of these defended people in audit and I've seen where people have made mistakes. And so what we've done with the app is to really simplify, one, the use of the app, make it easy for clients to be able to track what they are doing on the go. On the app, for example, you can upload documents and store it. So the app also becomes a storage place. You can integrate the app with your calendar, whether it be an Outlook or a Google Calendar. So it's easy for you to look at your calendar and be able to know, oh, okay, today, this is what I did. And for the 8 hours of my time, 4 or 5 hours of my time went into the real estate activity. So it's very easy to begin to take your time from your Outlook or your Google Calendar, and it feeds into the app without you having to recreate or manually enter stuff.
Awesome. So let me ask you a question. Is a wholesaler a real estate investor?
So define what you mean by a wholesaler.
Well, remember the wholesalers. What wholesalers do is they put a property under contract,
Mm-hmm.
then they turn around and find an end buyer for it.
Mm-hmm.
They literally just flip the paper for a profit,
Okay.
but they never touch the house.
Right.
But it's a real
So,
estate transaction. So on the HUD, they have a fee that they make. Let's say I'm the wholesaler
right.
and I found a property in Marietta, Georgia, where you're probably close to that area over there in Atlanta, and
Mm-hmm.
you are the end buyer. So I go and I say, hey, Michael, I got this property. It's a fix and flip. You have to buy it. Let's just work around round numbers. You have to buy it for $90,000, and maybe you got 50,000 in renovations, and
Mm-hmm.
it's worth 200,000. Okay, and you go look at it and you say, yeah, Ricardo, I like it. I think I'm the buyer for it. And then I turn around and I sign the contract to you, and you close on it. When you close on it, you find out that I put it on the contract for 70,000 and I sold it to you for 90. So that the 20,000 is my spread, right? Am I a real estate investor by doing that?
Yeah. So let's first of all break this down. Okay. The issue is, first of all, what does the code define as real estate trade or businesses?
Right.
Okay. So what you just explained definitely falls within what Section 469, subsection C7 defines as a real estate property trade or business, because it talks about, it includes real property development. It talks about redevelopment. It talks about construction. It talks about reconstruction. It talks about acquisition. So the
Yes.
example you just gave, that's somebody that is doing an acquisition. Okay. So by reason of, is this person in a real estate trade or business? The answer is absolutely yes. Then now you want to now say, okay, this person is in the business. The next question becomes, does he or she qualifies by reason of the definition to be called a real estate professional? That's where, okay, the more than half of the personal services that the person spend is in a trade or business that is real estate. That comes in, again, from what you just described. It's more than likely more than half of that person's time every year is into real estate. So he or she has checked box number one. Then the next thing is, does this person perform more than 750 hours of service, right, in real estate trade? In this situation, again, the answer is yes. So the person is a real estate professional, but you want to take this a step further. The next question becomes, in the example you just gave, the money that person is making, he or she is not likely going to be making losses,
Right.
right? He or she is likely going to be making profit. Where his real estate professional status becomes really key for his tax planning has to do with, such a person is likely to have his own portfolio of real estate, right?
Right.
He can be generating losses from his portfolio.
Correct.
That's where most people trip, because in spite of the fact that we just define him as being in the trade, we just define him as making the hours, we want to be sure on his portfolio of long-term rentals, he makes the time and he gets material activity hours from those portfolio. So when he's getting losses from his portfolio of real estate, he can match those losses against his profit from his wholesaling business.
I'll tell you this, Michael, now that you mentioned, and I love your explanation, by the way. I knew the answer. I just wanted you to say it because you are the trusted CPA here today on the show. And by the way, I am not allowed to give any kind of tax
Advice.
advice or anything like that, right? So, when I was a W two, I also worked the corporate world for many years in the oil and gas business in Houston, and I was paid very well. And my peers, we would all go have a coffee in the morning, and sometimes we will talk about taxes, okay? But they will. I will talk about it, but they will complain about it.
Oh,
If you know
yeah.
what I'm saying.
Mm-hmm.
I'm getting taxed, and they're pulling this much out of my check, and here I am sipping my cup of coffee, and I'm laughing, right? And and they're like, "Why are you laughing, dude?" And I'm like,
You
"Because
don't
I
get
know
it.
better. I'm a real estate investor. I own properties. I have rentals." And just so you guys know, my effective tax bracket is anywhere from 11 to 13%. And they looked at me like, what? We paid 35 because we were on the highest, they were all
Mhm.
making more than $200,000 a year at the time. And I'm like, yeah, but you're just leaving that money sitting in the IRS. So you have to be a real estate investor if you want to take advantage of all these, of the tax code, basically.
Oh,
Not the
right.
deductions, it's the tax code.
Yeah.
And I go and I say, look, do you know who wrote the tax code? And they're all looking at each other like, no, we don't. I said, rich people did. And the reason why they did that is to say they could take advantage of it and not pay any taxes. So then we started talking about how, sometime in 2000, when Romney was running for president, they were talking about he wasn't paying taxes, right? And of course, as a rich guy, he knows how to take advantage of the tax code. And then when Trump was running, it was the same thing. Um, Needless to say, Michael, those three guys that we used to have coffee and complain that they used to complain about being taxed too much. Today, they're probably multimillionaires in real estate because they
Awesome.
started acquiring rental properties. And once they understood that just by owning rental properties and doing the correct, taking the correct steps to deduct and
Hmm.
account for their time and all those things, their tax bracket just completely changed, and they've been able to save hundreds of thousands of dollars probably throughout the years.
Yeah,
Um,
that's
so
interesting.
it's kind of funny because honestly, I don't enjoy rentals. I don't. Um, every time something happens, it gives me the goosebumps, and sometimes those repairs, they're costly. Like I had a property where I had to go change out a sewer line, and changing out a sewer line, it costs an arm and a penny. So I had a property that burned down, and actually I had another problem. I have three fires in the last, I would
Mm.
say, 10 years probably.
Well,
And by the way, I came out winning every time one of those things caught on fire because I had insurance on it, right? Which is the right thing
right.
to do. But in I mean, if I count the headaches that you get as a landlord, right? Because things happen. Sometimes people don't pay you rent, you have to evict them, they destroy the property. I lived through all of that. And I don't enjoy it. I don't get excited about, oh, I'm gonna keep a rental. But when I think about, well, if I don't, then I'm gonna be paying all this other money on taxes, and I'm like, no, that's like a necessary evil. Like I have to have the rentals because otherwise, you're either gonna pay in headaches or money in taxes, and I'd rather choose the headaches, to be honest with you. That's my personal case. Okay, and I at some point I had 100 rentals, Michael,
Oh, wow.
and that's when I found out I didn't like being a landlord,
Landlord.
which is kind of too late. Today, that's not the case. I don't have that many properties. I don't think I ever will have that many properties. I don't care for it. I like more the sales and marketing business, but that's why I ask you that particular question, because some of my real estate friends will say, "Well, a wholesaler is not an investor," and to a point, they're right. When you're a wholesaler, you're in the sales and marketing business because you're marketing to potential sellers so they can trust them into selling their properties, and then you're turning around and finding an end buyer. So there is a combination of the two. I believe you have to be an investor because you have to know how to analyze the deal.
Yep,
If not,
absolutely.
how can you know numbers and things of that nature?
Right.
Number two, you have to solve problems. That's number two. And then number three, you gotta be good at marketing because
Right.
otherwise, how do you attract these people, right?
Yeah. So I think most times, including CPAs, unfortunately, they impute into the tax law and the tax code what is not in it. And Ricardo, you are so right. The tax code was written by attorneys for the rich folks.
Yeah.
Okay. But here's the great thing about the tax code. Whether you rich or poor, if you understand how to use the tax code does not discriminate against you because you are not rich. In fact, the tax code should be, and that is what it was designed to be, an incentive to behave in a way to get you rich.
I love
Unfortunately,
it.
like,
You have to say that again.
yeah,
What
yeah,
is?
the
Say
tax
that again. I love that.
the tax code is the government way of incentivizing you to behave in the way the government wants. So let's pull back. Let's just talk about real estate. Why do you think the tax code is very generous to real estate industry? Because the government itself does not want to take on the responsibility of being the one building houses for people to live in. So what do? They were like, okay, if we have folks who are willing to do this, I mean, take yourself. You just said you hate being a landlord. But why do you do it? You're doing it for the tax benefit.
That's
So
right.
what does that do? You because the government is giving you the incentive to do that, you are doing that. So that's why I say the tax code is an incentive to behave the way the government wants. Okay? Most people don't understand that. Like your friends originally were just complaining about their tax bill instead of trying to really understand it and use it to their benefit. All they were doing were just complaining. And when you take on the mindset of, oh, the tax code is just the government trying to get money out of your pocket, then you already lost the game. But if you look at the tax code, here's one thing I've learned in 18 years as a CPA. The ultra wealthy, they do not take their tax bill on its face value. Everything they do, they are going to come back to you and say, hey, Michael, how do I optimize this for tax purposes? They tell you, I want to do this. Okay, is there a tax benefit for it? Or is there a way we can structure this so that I can benefit from it on a tax basis? Most people have not learned how to do that. What most people do, including people who have very successful businesses, they see the tax code like some disease that they have to avoid. And then they just wait until the end of the year and then grudgingly send off their papers to some CPA, to some tax preparer. And then they are panicking and having anxiety attack until that tax return is ready because they don't even know what they are going to owe. And then that person comes back and say, yeah, your tax return is complete. You owe X amount of dollars. So that cycle just continues. People, they just hate the taxes. Instead of understanding, it's like there's a hidden treasure in the tax code. If you take the time to master it, all it can do is help you get better. I was in a webinar and I told my attendees, I said, look, if you are not intentionally planning for your tax code, you have just put yourself in at least 18 years tax jail. Because if you think about it, for somebody that is in the 35, 37% tax bracket, that is not doing any kind of tax planning, you know what that person is doing? 2 hours plus of that person's work life every day is going to the tax guy. If you multiply that by an average of 30 years of people working, you can see how much of your time you can buy back by reason of paying minimal taxes legally, ethically, and morally. Okay. So I get super excited with the tax code because for me, it's just a roadmap to financial freedom.
I love that. It's the roadmap to financial freedom, and it's also a way for you to hack yourself into wealth. Um,
Yes,
now,
absolutely.
now let's talk about your real estate journey. How did you get into real estate?
When I came to the United States, the first thing I found out real quickly was I didn't enjoy the fact that I was having to pay rent. Okay. And so I started asking questions. And then my questions were, what does it take to own a house? And then I met a real estate agent who gave me some education and I picked it up really quickly. And I started wondering, why don't everybody own their own homes? Right? And then later I began to figure out, okay, for some people, there are many reasons. All right. But for me, I saw as a CPA the tax benefit of me owning my home. Two, I saw how real estate allows you to use other people's money because that is a huge part of the game with real estate. I mean, think about it. Real estate allows you to put whether it's 20% or 25% down on a property, and in some cases, if it's a seller finance deal, and then you own that property, and then you take all of the tax benefit from it, right? So when I figured that out pretty quickly, and the moment I figured it out, there was never going back anymore. So today, I kind of joined with a friend who is a real estate construction person. Every time we are having at least two or three development that is going on, I have clients, for example, who have money. They don't know what to do with their money. They come to me and they say to me, "Hey, Michael, where can I put this money?" I'm like, "Hey, we're investing in this 9 homes here that we're building." And so that's how my journey in real estate started and has continued.
Wow. So, what was your first property? Like, was it the house you own, or and what
Well,
about after that? Did you buy any rentals? How
yes,
was that
yeah.
transition?
So what I kept doing originally was every time I upgraded, I didn't sell the former house.
The last
I,
house, yeah.
so that was how I started. And then I have this friend, like I said, who came first to me as a client. And then our relationship changed from just him being my client to becoming, he started saying to me, "Look, how about we partner together? You bring partners or you bring clients who have money. I am into real estate. He does a lot of buildings and stuff like that. So he's always constantly looking for money." And of course, the first one, I didn't participate. But eventually, about two or three of my clients who participated in it, of course, I saw the benefit that they
You saw
got
that.
from
You
it.
saw how much money they were making.
Yeah, why do I want to be a cobbler that doesn't have shoes, right? So that's how I got in with him. So today we are like really deep together in how we do business.
Look, I don't do this anymore, but in 2000, I think it was in 2015, I got laid off from my six-figure job, and I had already real estate experience. I knew how to fix and flip. I knew how to do the rentals. I didn't know much about wholesaling, but the one thing I wanted to do was make the same amount of money that I was making in corporate. I just didn't know how. And
Mm.
and because I was making 200 and almost $300,000 a year as a W-2 guy, and I also live like a $300,000 a year W-2 guy. So I had the big house, the cars. I will pay for my mom's car, my mother-in-law's cars, and my daughter's car. Everybody. I have more cars than a rapper. You know what I mean? Um, so anyhow, when I got laid off, I'm like, all the money I have is not gonna last too long because my expenses are way too high.
Up there.
So I said, okay, I'm gonna double down on fix and flips because if I can flip 5 to 10 houses a year,
Yeah.
I can make the same amount of money. I just don't know how to access the money for that because it was all with hard money loans. And needless to say, I had these other partners that I had already taught how to do real estate. So they had a little bit of money, they had good credit, and they have good W-2 jobs. So what we did is we did some sort of like a team, and
Mhm.
I would put the house under contract and I will sell it to them and I will make a fee on the sale.
Right.
Then I will also be the contractor. So that's how I started making my money full time, was actually as a contractor slash wholesaler. And then when we sold the properties or we rented them, we were partners on the deal. Then we made another portion of the deal. So for a while that worked. And one day I discovered about self-directed IRAs.
Uh,
And there was an office in Houston. It doesn't exist anymore. So another company bought them out. And they did educations on Tuesdays on how to effectively use your self-directed IRAs for real estate investors. So I went there to take a class, and they had a section where you can get up and say your name and do what you do. So I go up in there and I said, "Hey, my name is Ricardo Rosales, and I've been a real estate investor since 2008. This is in 2016 now, probably. Currently, I have 3 fix and flips, and I'm about to put them on the market. I have other properties under contract that I want to fix and flip, and I'm just looking for some people to put some money on these deals. So if you have some money idle, let me know. I would love to show you what I have." And I just sat down, and that was it. So this old man comes to me and he says, "Son, I have about $80,000 to work with on one of those flips. Is that enough money for you?" And I said, "Honestly, I don't know, but why don't we just take a drive with me, man, and I'm gonna show you what I'm working on." I call that the money tour, but I gave it that name later on. Okay, not at that moment. So I took this guy, and first I showed him my rentals. I already had a few rentals, and I said, "Hey, look at this property. I own this property. This is how much I bought it for. This is how much I put in it. This is the cash flow, and I own this for X amount of time." And then he's like, "Oh man, that's a nice house." And then I go look at another one, and I look at another one, and I showed him probably at the time maybe, I don't know, 8 houses in the same area. Okay, now these houses were far away from where I lived. They weren't close to where I lived. The reason why I lived in Katy at the time, and Katy is
Mhm.
like very hard to find good deals in there, you know. So I was going to where the deals were, and then I said, "Let me show you the fix and flips I have." So I showed him like 3 flips, and he's like, and he saw people working on all these houses, and he's like, "How are you financing all these deals?" And I said, "Well, some of my money and hard money, and in between so and so and me and the other guys, we all get together and we kind of like make a pool and we make it happen, you know." And he's like, "Oh, okay." So by the time it's lunchtime, so because we started early and now lunchtime, and I said, "Let's go eat some barbecue." We have some barbecue, and then he's like, "Well, son, I think I've seen what I needed to see." I was like, "No, you haven't seen. I have 6 other houses over there that I need you to go. We're close enough." So he's like, "6 other houses," and I was like, "Yeah, come take a look." So we go there, and he looks at all these properties. And as I'm driving him home, because I went and picked him up at his house, he looked at me and said, "How many projects do you have going on right now?" I
Right.
said, "I don't know, man, maybe 10, you know." And he says, "Son, I don't have $80,000. I have $1 million. How do we put it to work now?" And I looked at him. He did not look like $1 million man, that's for sure. um, Not at all. He lived in a regular home. He drove a
Mm.
paid off truck that was old. He dressed like normal, like no, not even, not nothing. You know, you could not tell by the man, the way he looked, that he had $1 million in his deal. And that's how I got my first $1 million. And then we put all that money to work. And then I realized every time I put somebody on this tour, they open up their checkbook. So I gave it that name, the money tour. And I
I,
would tell my partners, "Guys, I got somebody else from that IRA place. I'm gonna give them the money tour, so you guys go take care of business." And they will go on the rehabs, and I will go do the money tour. And I went from a million to about $15 million on private money in less than, I don't know, maybe a year or so.
wow, I like that monitor. I'm going to steal that from you.
Yeah, use it, man. It works because honestly, all I did was show him what we were working on. I wasn't even asking him for the money. I was like, "Look, this is what we're working on. You see people, you see houses, you see some rentals. Tell me how you want to get involved." And he said it. "I don't have 80,000. I have 1 million. I want to loan it to you." Like, because at the time we were paying, well, I think we were paying 10% interest
Yeah,
only, and 2 points, which is not abnormal. That's hard money.
yeah,
And
right.
it got to the point to where we were doing 8%, and less points, because now after I got him, then I got another guy that had 3 million, and I had another one guy, and so they all started like, take it, take it, take it, right? So, needless to say, it was very stressful. It got very stressful towards the end because we built a huge operation. I mean, we have more than 70 employees, people working on houses in multiple stages. We had a warehouse, we had a couple of trucks. We even bought our dumpsters because it was.
Mm.
I looked at how many dumpsters I had on my projects, and I'm like, hold on a second. I paid $10,000 this month on dumpsters?
Dumpsters to
No
rent.
way. I could go buy one and have a driver go around and collect it, right? So, um, unfortunately, in 2017, at our peak, we were doing 47 projects at a time. Hurricane Harvey came in, and it disrupted our business completely. And yeah, it was very hard to get out of that. But that's how we raised all that capital. So,
Wow, what is Johnny?
Yeah, and now today I don't want to do any of that anymore. I kind of I may raise some capital for some self storages that I have planned to do. I don't
Nice.
want toilets. I don't want ACs anymore. I just want boxes where people just put their junk and we collect rent on it.
Yeah, so
Um,
so self storage is a great kind of real estate investment. If you want it to be less labor intensive, in fact, it's almost completely passive just because of the way
yeah.
you can structure it. So I have a client, all that he does is self storage, and it's
Yes.
huge for him. Yeah, that's a
No,
good
and
one.
they appreciate in value like crazy. It's a commercial deal, so those deals are analyzed completely different.
Yes.
Banks love giving you money for that at a preferred rate. So I think at some point in the next year or so, I have a project that I'm not going to say the name because somebody might steal it, but I have already the names for it and everything, and it's going to be for boats and RVs. That's big in
Oh, okay.
Texas because everybody has those things in Texas, So,
Yeah.
and we
I,
own the land already, so it's just me. I've been holding back on it, and I don't need a lot of money for it. I only need like $2 million, and we're gonna build it out right. So
Yeah, let me know because I have a client who is a developer in ROV Park. I have three of my clients that just invested with him, and
yeah,
this is a very high-end ROV park in, I think it's in the Austin area. Really
oh yeah.
high-end.
So you understand now what I'm talking about, right?
Yeah,
So the
yeah.
one we're doing is gonna be in Sweeney, Texas, which is south
Okay,
of Houston. Just south of
right.
Houston. And we own the land already. So
That's
so
good.
we have 3 acres, and we can fit 90 to 96 units in it. So um, and honestly, that a boat and RV storage doesn't need much. It's basically metal buildings and cameras and things like that, and maybe a bathroom for people when they go load and offload. But other than that, is not that fancy. So now,
Right.
Michael, what's next for you? I mean, I know that you're in the app right now, right? That's your main thing. You're gonna release that app. When do you expect to release it?
Oh, the app will be released this month, December. I
Okay.
know this show is going to should come up January, February, but it definitely is going to be out before the end of this month. I'm just going through how the AI tool is. I am the super tester, okay? Because as a CPA, I understand what the IRS agent is trying to trip a client on in an audit. Okay, so I'm spending my weekends really testing the app with the intention of let me try and break it.
Right.
Okay, so that's what I'm doing. I think I should be done by next weekend and be done. Once I'm done, they're going to go live because again, all of the things that typically would take time, we already got that. For example, the app has long been approved by Apple, Android. So on all platforms, it
Right.
has already been approved. All of our payments integration system are in place. Like I said, I had built the app way back 2019, 2020. But when it was built, I wasn't satisfied. I didn't like it. I tested it with a few clients. They gave me their feedback and I dropped it. And I took another developer. Again, I didn't like it until I found this person who did this work now. So it should go live definitely before the end of this December. And in terms of what is my next point, I'm working on writing a book. You
Oh
know,
wow.
yeah. So you see, in life, when you are busy on a journey, you got to sometimes be able to stop and really look back and reflect on your journey, especially when you can reflect on the journey with a lot of gratitude. Because many times um, we all are not necessarily the smartest people, no matter how successful you may think you are.
Right.
Somewhere, somehow, just like the story you gave, right? You just gave a story of somebody who, like, he gave you a break when
Oh,
you passed.
he definitely gave me a huge break.
Right. And many times in life is like that. We meet one person, and that person literally changes the trajectory of your life, of your career, of your business. And I think I have that kind of story I can tell.
Do
But
you
what
have
my
a mentor for that?
Oh yes, I do. I do. So my mentor is a fellow CPA like me. He's My mentor is the CPA to Robert Kiyosaki. His name is
Okay.
Tom Wainwright. Okay. If you've not read his book, I will recommend you go read his book. His book is called Tax Free Wealth.
Tax
Okay.
free wealth.
Yes, please read it. I think what that book is going to do to you, Ricardo, is it's just going to remind you of, oh my God, I have been doing these things, but I really didn't know that I was doing the right thing. Okay. So Tom Wainwright is my mentor.
What's
By
his name again?
Tom Will Wright,
Okay. Yep,
WEEL.
got it.
Right. So read that book. It's called Tax Free Wealth. Through Tom, I have been blessed to not just only meet people like um, Robert Kiyosaki. I've had the privilege of sitting down maybe multiple times with Robert Kiyosaki. I've had the privilege of being on the same stage in conferences with people like Robert Kiyosaki because of Tom, right? So my point is, you go through your journey of life and you see how you connect to one person and that person changes the trajectory of your life story, right? So I just think it's time for me to write a story of my life. But in writing that story of my life, I'm writing the story of taxes. But it's my life story, but it's woven around
Of
taxation.
course.
So that's what I'm working on now. I want to be able to be done with it before the month of March next year and kind of put it out there. So that's what my next thing is. And then, of course, once this app goes live, I will be on every platform I can find. I'm going to be connecting to all of the big real estate platforms because they need it. Most people need it. You cannot be doing real estate professional hour tracking with clumsy spreadsheet. Many of them just don't know how to do things like that. So I want to be able to make people know, look, this is what we've put out there. And their CPAs will be excited because it's going to be a situation where they invite their CPAs to it, and then the CPAs have access to what their clients are doing. So as a CPA, you could have 200 real estate investors who are using the app, and you have one platform as a CPA. You see all of your clients' activities there. So when it's time for an audit, if any of them is being audited, you are not telling them, oh, get me your hours and all of that. You got it. So that's what I will be on for the next 3, 4 months.
I love it. Do you have a final message for our audience?
My final message I already said to you. Taxes is one of the key pathway to financial freedom. So for anybody that is trying to figure how to get themselves to a place of financial freedom and generational wealth, you got to master your tax code. You cannot leave your taxes to, oh, my tax guy handles my taxes. You
Right.
got to understand what your tax guy is doing because many times people think their tax preparer are saving them taxes, but that's not necessarily the truth. What most people are doing is they are just preparing taxes. They are not telling you how to use the tax code to get rich. Taxes can make you rich.
I love it,
That's
man. Thank you so much for being here today, Michael. Guys, go check out the platform whenever he comes out with the app. By the time you listen to this,
it.
you
Will be
should
out.
go and get the app. With that being said, don't forget to hit share, like, and subscribe. We will have an Attend Growth event, the real estate entrepreneurs in Houston, Texas. I will release the dates on the next episode. And with that being said, I'll see you on the next one. Thank you so much,
I
Michael.
look forward to that. Thank you so much.